colleague of mine was recently asked, with everything happening in the United States under the Trump administration, the constant announcements that are quickly revised or reversed, and the buzz around Elon Musk and Doge, is this the craziest time you've ever lived? He replied, no. The period from 2008 to 2012, when the world was on the brink of financial collapse, was far more concerning. Over 400 banks in the US failed, including Lehman Brothers, Washington Mutual, Wachovia, and Bear Stearns. We had late-night meetings of central bank officials, bailouts for auto companies, a world of 0% policy interest rates. That was crazy. I couldn't agree more. During the Great Financial Crisis, I developed a presentation titled How to Survive a Bear Attack, which addressed the market and economic environment, putting things in perspective for investors. Today, we revisit those rules in what I'm calling How to Survive a Trump Attack. I'm Petursson, Chief Investment Strategist at IG Wealth Management. Join me each week as we discuss the trends dominating the investment landscape. It's the week of February 24th, so listen on as we navigate the living market. The first rule is to vanquish fear and panic. A panicked response occurs when investors sell at the drop of a hat, historically at the bottom of a bear market or correction. Data shows significant selling in equity and balanced funds in the United States occurred in 2002, 2008, 2018, 2020, and 2022. Each of these periods coincided with the S&P 500 index lows during a bear market or a correction. Panic selling can set financial goals back years. So, fear and panic is something that we need to put aside, as difficult as that is, because it can be extremely destructive to our portfolios. Once we put fear and panic aside, the second rule is to know your environment. The U.S. economy is doing better than many may think, growing nearly 2.5% annually by most recent measures. Unemployment remains near historic lows at 4%, manufacturing is expanding, and exports for the world's 5 largest exporters are up on a year-over-year basis. Tariffs aside, we see very low risk of recession in the next 12 months in the United States. At the corporate level, 90% of companies on the S&P 500 index have reported their most recent quarterly earnings, with profit growth up 12% year over year and 71% of companies surprising to the upside. The environment is trending in the right direction. The third rule is to keep moving forward. Now imagine if this was 5 years ago, and I predicted at that time the next 5 years what we would see is a global pandemic that would shut down economies around the world, 2 bear markets, riots on Capitol Hill, 2 major invasions, one with Russia at war with Ukraine, and the other one with Israel at war with Hamas, a sharp increase in inflation, and the second largest bank failure in the United States. You might think that the best strategy would be to get out of equities, but despite all of these events, the S&P 500 index doubled over the last 5 years. Investors who panicked missed opportunities and set themselves back years. Often, what we think moves equity markets isn't actually the case. What actually moves equity markets over the long term is the resilience of economies and the ability of companies to grow their earnings regardless of the political environment. Finally, don't be afraid of strange noises in the night. If something truly intends us harm, it will stalk us silently. So typically, it isn't the headlines that matter to the markets. Now, yes, the news may swing investor sentiment day by day, but true black swan events are unpredictable. This is why, with respect to portfolio construction, diversification matters. Holding a portion of our portfolios in defensive positions helps mitigate those silent unknowns that occasionally appear. These defensive positions add a layer of protection while providing a source of capital to take advantage of equity market dislocations when they happen. And there you have it. We can't predict what will come from the new administration in the United States, but we can establish rules to help us avoid mistakes and seize opportunities. I'm Philip Petursson, and you've been listening to Living Markets Podcast. If you've enjoyed this podcast, please take a moment to rate it or share it with colleagues and friends. It will help other like-minded individuals find us. Thanks for listening.
The content of this podcast, including facts, views, opinions, and recommendations, is not to be used or construed as investment advice and is not an offer or an invitation to buy or sell any security. The content of this podcast should not be relied upon for any purpose, and IG Wealth Management is not responsible for any reliance upon it. This podcast includes forward-looking information that reflects our current expectations or forecasts of future events. Forward-looking information is subject to risks, uncertainties, and assumptions that could cause actual results to differ materially from expressed herein. Our views are subject to change based on market conditions. Commissions, fees, and expenses may be associated with mutual fund investments. Read the prospectus before investing. Mutual funds are not guaranteed, values change frequently, and past performance may not be repeated.